Good morning, good afternoon, good evening, wherever you are joining us from, and thank you for joining us for our first WealthE Wednesday of 2021. It is great to be with you and to be restarting our WealthE Wednesdays for the year. And as you know, WealthE Wednesdays is all about giving back to you, our community. And what better way to start than to have Scott from Migrate with us, and Paul Niederer, who's going to be speaking to us about fractionalisation and tokenisation and everything in between that. We are really excited to learn, as this is a very hot topic at the moment. So with that, I'd like to welcome both Scott and Paul.
Awesome. Thanks very much.
Thanks very much.
So just before we get into it, we love to know where you're joining us from. I sit in Saudi Arabia. Scott is joining from Cape Town in South Africa, and we've got Paul that's coming to you from Australia. So I'm sure that our participants are as diverse as we are this afternoon. So please just pop into the chat box. Let us know where you're joining us from. We'd love to see. And also just to remind you that I'll be online monitoring the questions. So please do pop your comments and questions into the Q&A box, and we'll get Paul and Scott to answer them for you. Over to you, Paul. Over to you, Scott.
Awesome. Thanks very much, Lee. Well, it is, you know, it's uncanny for me how the universe works. And obviously you and Paul set this up quite a long time ago. And most people have probably now heard of what's been happening around the world and this whole thing with GameStop. You know, there's an article here which I'll put in the chat box for people, which is all about the 5 big trends that are happening. And I'm not going to talk about what's happened, but then on the airplane, I literally I don't know if you can see this, but hang on, it's like losing it with the picture. But I'll take some screenshots. But it's all about the GameStop saga. Says Wall Street is entering the new world of disorder. $26 billion has been lost since Friday. Robinhood's other drama, a mid-year public listing. So really, you know, it's just amazing how the world is exploding at the moment. And I just find it fascinating that you and Paul had already agreed to do decentralization. You did see some of the things here. Paul sent me last night, which I watched. There's this guy called Crypto Rand that Paul and I met years ago through the whole crypto space. And he was the first guy to talk about crypto on CNBC. And he's got some videos here about, you know, what's going on and everything else. And I have to say, I'm really looking forward to Paul's presentation, because even when I watched this last night, I felt a bit like I was watching a webinar on Russian economics, where I kind of understood what he was talking about, but there were many acronyms that I didn't fully get. I think what is so exciting is that we've been talking for a long time about Wealth 5.0, certainly for the best part of nearly 2 years now. And there's 5 different parts to it, between the impact, the creativity, the high touch, how you're actually touching humans, the high tech, and obviously the digital component. And really, you know, the last thing with WealthE Wednesday, before we get into the topic, is that it's also about investing. You know, this incredible building, which was in America, we actually closed last week. And so I've invested in this building, and you know, I never thought that I'd be able to invest in amazing deals like this, you know, and now it's truly a possibility. So, you know, make sure you're going on the platform. We've launched 2 new deals this week, and I think we've got another 2 coming next week. So we've got some really exciting products coming to the market, and you know, you get to participate both in property deals, in debt deals, and in structured notes, which is in multiple currencies. Remembering also that you can manage and do everything in one place. So we've got digital wallets. You don't have to go overseas and set up structures. You don't have to invest in the Seychelles or America or Australia or Europe or England. You can just manage everything all in one place with one global digital wallet, and it's backed by European regulation. And then if you do want to talk to human beings, we always say we're a platform company with a human heart. You know, Alex and Fritz are you know, available to chat, and we've actually just had a new gentleman join the team as well. So, you know, reach out and chat to the team if you're wanting help. But really, I thought that from an introduction perspective, I don't want to take too much more time, because I'm absolutely fascinated to hear from Paul and to understand exactly what's going on. And, you know, as we've been talking about Wealth 5.0, we now are going into 2021, or very much are firmly in 2021. And today is really all about asset fractionalization, tokenization, and buying and selling tokens on decentralized exchanges. So the acronym is all around DeFi. Paul actually ran the oldest equity crowdfunding platform in the world called ASOP, that was started in 2008. I had the privilege of meeting him as far back as 2014, I think, at one of the first crowdfunding events that was held in Malaysia. And then in 2015, we were both at an event in China together around crowdfunding. And really around the world, Paul is a respected authority in this space, and has always kind of been at the forefront of where these trends are going. So 10 years ago, equity crowdfunding was very, very new, and now it's pretty established all over the world. But in terms of tokenization and decentralization and DeFi and everything else, this really is the new game. And Paul, if you don't mind, if I paraphrase what you said, is that even in the last 3 months, you've spent a lot of time really trying to understand the space. And so the only thing that I wanted to say as I hand over to you is that if people are feeling a little bit overwhelmed and some of these terminologies are things they haven't heard of before, everyone is new in the space. We're all learning as fast as we can. And I think, it's not like any of us are sitting here and have been doing this for 10 years. And I just wanted to reiterate that we're so at the beginning of this whole trend that, even if you're watching this video, you are effectively an early adopter. And so well done for being part of it. And Paul, over to you. I'm really, really excited to learn all about it.
Thanks very much.
You've muted yourself there.
I'll unmute myself and share the screen. So
we're seeing decentralized finances taking over the world.
So you can see my screen now?
Yeah, I think just put it in presentation mode. It's sort of in the, you know how you kind of got the slides down the left-hand side and then the main side on the right. Yeah, that's perfect.
So how are we going there?
Gotcha.
Okay, so as Scott mentioned, it's decentralized finances taking over the world. And it's a very bold statement, but it definitely is as you get more involved in this. In the last 3 months, I've learned so much. So hoping that I can communicate to you so you can learn how you can start and join this revolution. And the actual real title of it is Asset Fractionalisation and Tokenisation, plus buying and selling tokens on a decentralized exchange, which is relatively boring. Scott did a good introduction there, but I've been in this whole investment aggregation, structuring, global cross-border transactions for a long time. And at the moment, I'm working with a global team on building a tokenization platform and exchange for fractionalizing and tokenizing assets that have strong income streams. And we're actually tokenizing the income streams, not the assets. But of course, whoever's got the platform can do whatever they like. They can do it in other ways. So before moving on, I just thought I'd get some definitions. As Scott said, some of these terms are difficult. DeFi is decentralized finance, and it's an ecosystem that allows the utilization of financial services such as borrowing, lending, trading, getting access to insurance without the need of a centralized entity. So it's done on a decentralized basis. Tokenization refers to the process of converting things into digital tradable assets. And fractionalization is the concept of splitting ownership of something so that many people can receive the benefits from it in a proportion to the amount they own. So like it's, of course, shares and stocks and things like that is a traditional concept which even exists today, but people are increasingly associating fractionalization with digital assets recorded as tokens on blockchains and the opportunities that they create. Decentralized applications, or dApps, are like the apps on your phone, but they run on Ethereum. And Ethereum is like the world computer. It's computers all joined up that run on Ethereum, that are programmed on Solidity, and they run decentralized peer-to-peer networks on there. Smart contracts are the programmable contracts that between two parties that sets out the conditions of the transactions and the trust aspects for executing those. And finally, wallets are a user-friendly interface to the blockchain network that can be used as a storage transaction and interaction bridge between the user and blockchain. So those 6 words, when I looked through, I thought, well, they're the ones that probably will come up the most. And then look, if it goes over your head and you don't completely understand it, don't worry, because you could always watch this again. I've sent to Lee a book about how to DeFi. There's 202 pages, lots to read there, but this is really going to be a good part of the future. Some of the things I'll mention in terms of apps or exchanges or places are Binance, which is a global exchange, Ethereum, which I've just mentioned, but they've got the currency Ether, MetaMask, which is a wallet for Ethereum, a decentralized wallet, Uniswap is a decentralized exchange, and CoinGecko is a great place just to store everything that you buy and sell. So we're going to go through that in more detail, and we're also going to go how you go through this process of from your local bank, funding an exchange like Binance, buying Ethereum, sending it to MetaMask, then buying a decentralized token, and then writing it up and recording it on CoinGecko so you can remember what you've done. So that'll be near the end of the presentation. I thought for those that weren't maybe so au fait with blockchain, I've got a couple of slides here on blockchain, but really blockchain is a series of time-stamped immutable records of data managed by a complete network of computers, not owned by a single entity. And it's a simple method of transferring information in a fully automated and secure way. Party A initiates a transaction, which creates a block, and that's why it's called blockchain. That block is verified. And the process of verifying it is known as consensus. Usually once you get to about 6 computers, they say, well, we've got consensus. And once they've got consensus, that block is added to the chain. So that's how you get blockchain. So then it's distributed on multiple computers, which means falsification is practically impossible. And you need, because you would have to go back and you'd have to falsify every single block on the chain on hundreds of computers. So that's, going to be difficult to come. So the features and why people like blockchain is first of all, it's a mutability, that data once stored cannot be modified or altered. It's transparent. You can look at what's happening at any time. It's efficient. It enables businesses to carry out the operations more efficiently. It's traceable. It offers continuous traceability, which prevents activities that are fraudulent from occurring. And it utilizes complex cryptographic algorithms and methods to achieve high-level security. So, as I mentioned this before, it's like a transaction request is made by somebody. The request goes across the network of computers, which are known as nodes, to the other user. It's validated. And then once the transaction is verified, it's combined with other transactions to create a new block of data for that ledger, and then the transaction is complete. So it's just a process of making sure that things are recorded. So when we talk about DeFi and decentralized finance, of course, then the opposite part is somewhere there's centralized finance, and that's your banks, your insurance companies who, well, they identify your stakeholders, they do KYC, they do everything like that, the centralized infrastructure. And I liken it to like if you're going to get your driver's license renewed, all of your details are in probably one big computer somewhere that's owned by the transport department. So unless you go in there when you can, or if you can do it online or whatever, but it's their domain, and they are the ones that can, falsify your records or do whatever, or do a good job or not. But with decentralized finance, it's decentralized. There is no one person that manages that. You could say that traffic department's computer. It's spread out all over the place. So if we look at it just from in terms of broad subjects, a centralized exchange, users send funds to the exchange and they manage them within an internal account. With decentralized, there's smart contracts on decentralized ones that manage it within users' wallets. And the custodial part is very important. When you look at custody, with an exchange, even though you've sent funds there and you've got your shares and things there, it's managed and controlled and owned by the exchange. So if it goes down, your things go down. But whereas with DeFi, it's non-custodial, and users independently manage their funds without a centralized exchange, and you own and control your own private keys. In terms of permission, users must complete a KYC process for centralized, but for DeFi, your actual Ethereum address and your access keys and everything like that is what you need. They say it's permissionless. You don't need permission yourself to do it, and although you would give other people permission if you wanted them to access your data. In terms of transaction speed, a lot of CeFi is based around people approving loans, people approving insurance, that type of thing. But smart contracts instantly execute based on the parameters, and people can locate their financial instruments. So that should give you a good idea of that part of it. And in talking about smart contracts, this is a big part of it. We've got the Ethereum blockchain, and we've got the smart contracts, which are a very important part of the execution of that. But they're essentially coded business logic that's going to be executed on the blockchain, and they're written directly into the code of it, and it controls the execution of that. And, you know, smart contracts are going to be in energy, logistics, healthcare, real estate, finance. In fact, they are in many of these industries already and growing at a particular rate. And a smart contract is, like, I often liken to it when you do a real estate transaction. You're sitting and there's one set of lawyers on one side of the table and another at the other side of the table, and they're executing a real estate contract. They tick off things like, are there any liens against the property? Is this person able to buy it? Have they got the funds in the bank? Are they not a foreign ownership person? Is the property able to be sold? All sorts of things like that. Well, a smart contract does that as well. In fact, in Dubai, you can take your phone and go to another person, and you can sell your property across to the other person with your phone, because it's all on the blockchain, the land records and things like that. And it just ticks through a number of things, and then the property can be transferred. So the smart contract aspect on it is it's distributed, it's replicated on all the nodes in the Ethereum network. It's deterministic. That means the program always operates in the same outcome that comes from it. It's autonomous. It can handle these tasks as a self-executing program. It's immutable. It can't be changed after deployment. It's customizable, so then you'll be able to program it in different ways or use the apps in different ways. It's trustless, means the two parties don't have to know each other. You don't have to have those lawyers in that room sitting opposite each other representing you. The parties interact directly because of that doesn't have to be a trustless environment. And then transparent, because it's based on the blockchain, then the source code to the smart contracts to everything is visible to everybody. So if we look at it, chunk up a bit and look at the finance sector now, it's overdue for a revolution. If you look at it in terms that it's, to a large degree, it's inaccessible to many. The financial services are exclusionary based, having arbitrary criteria like jurisdiction, investor accreditation. So, you know, you've got to qualify to be part of many aspects of financial institutions. That's why there's a lot of unbanked people in the world. Secondly, it's inefficient. Financial services are exclusionary based, having, oh, sorry, I've got the wrong text there. It's inefficient, meaning there's intermediaries, there's people involved, human people. It costs time and costs money because it's nothing, it doesn't execute like a smart contract, and it's very opaque. Financial services are often over leveraged, too big to sell. And just now people even like looking at silver, where they believe it's oversold by a certain point, and there's different things, shorts and all those sort of things that happen that people don't really know what is actually going on in some of these circumstances. So DeFi is an attempt to correct these failures in some ways. First of all, it's accessible. DeFi is globally accessible to anybody with an internet connection. And the services use code to eliminate intermediaries, as we mentioned with the smart contracts, with the repetitive and non-value-adding responsibilities. I mean, there's a lot of people that are just there that shuffle paper and basically hold up transactions. And then, of course, it's transparent because it's built on the blockchain and the publicly auditable. It's you know, it's very, very transparent. So, you know, there's some people around that believe that DeFi will do to finance what the internet did to news media. They truly believe that that's where we're actually heading with this. And so the banks, the giants of the financial industry that facilitate payments and accept deposits, offer lines of credit to individuals and businesses and other financial institutions, even governments, that's their sort of niche. But DeFi seeks to build a better financial landscape made possible by the advent of the internet and the blockchain technology, and in payments and clearance, accessibility, centralization and transparency. And I'd also say in terms of the assets and fund management area as well. So if we look at the two and compare them, the major issues with the current banking and things like that is friction, meaning that's basically around about cost and things like that. And Scott's spoken many times about the friction involved in transactions, where everybody's got their nose in the trough, taking a bit and holding things up and that. And then the accessibility, which we mentioned before, and regulatory uncertainties, and that not everyone is privileged to be banked in the current financial system. The DeFi movement is about bridging these gaps and making finance accessible to everyone without any form of censorship. It opens up a huge window of opportunities that allows users to access various financial instruments without any restriction on race, religion, age, nationality, or geography. So you think, well, what is this decentralized finance? Well, the movement allows users to utilize financial services such as borrowing, lending, trading without the need of Big Brother or centralized entities. These financial services are provided via apps, dApps they call them, in which the majority of them are employed on the Ethereum platform and accessed by an app on your phone. Now, DeFi is not a single product or a company, but instead it's a set of products and services that act as a replacement for institutions ranging from banking, insurance, bonds, and money markets. And DeFi dApps enable users to combine their services to open up multiple possibilities. It's often called money Legos because they can all be joined together to create a particular service. And in order for the dApps to work, they usually require collateral to be locked into what's called the smart contracts. So the cryptocurrencies that power this DeFi movement enable, because of the nature of them being able to be moved from device to device very quickly, it means they can bypass intermediary. It's very quick. It means that the 1.7 billion unbanked people can be there. Basically, it requires a person to have a mobile phone and the internet access, as opposed to going through lengthy verification processes. DeFi protocols do not discriminate, and that it's built on the top of the blockchain like Ethereum, and usually you have decentralized governing organizations to ensure that everyone knows what is happening and that no bad actors can single-handedly make bad decisions. And as all the protocols are written in lines of code, you can't really cheat the code. It's audited before it's published, and then it's in the public domain for anybody to check what happens with the actual code. So the fact that it doesn't require any intermediaries and it's deployed on the blockchain, which eliminates single points of failures, like you will have heard when a bank goes down or a travel agency goes down or a big shopping center, they just die because they have got single points of failures. And the DeFi application framework, they can be built ahead of time, and then deployment becomes a lot faster. And of course, as we mentioned, lower income individuals have access to it. So to summarize this, it's the concept of a decentralized digital financial ecosystem that does that, and it encompasses most of the areas in financial services, can be accessed by anybody, open source protocols, investor rights are ensured through smart contract, and is all things involving activities relating to money, and the only identification is your wallet. That's the key to all this, is your wallet. So if we look at some of the areas where DeFi is working, and first of all, stable coins. You might have heard of Tether. And Tether is a good word. Just as you tether your phone, you can tether a currency to the US dollars. So stable coins are a good one. So if you're buying cryptocurrency and you're buying things that are going up and down and up and down and up and down, and all of a sudden you think, oh, I've got to get out of this, and you don't really want to sell up and take all the money into your bank account, you can transfer it into a stable coin, so it can sit there equal to $1 US, and the currencies can go up and down and maybe down, and when they go all the way down, you can pull your money out of your stable coin and you can go back into the market, and you haven't suffered, because when people say, oh, cryptocurrency's crashed, if you've got your money in stable coins, it's still there. So lending and borrowing allows people to collateralize. Already most people, or many people, have got Bitcoin and Ethereum, and that they actually collateralize their loan online through DeFi, and they lend their tokens out and get an income from it. Then of course there's exchanges. There's centralized exchanges and decentralized exchanges. And as we mentioned before, there's the custody and custodial aspect. So that we'll go through that later. And then in terms of derivatives, it's a huge industry, the financial derivatives, but that also is part of DeFi and funds management and payments, because people pay backwards and forwards. And, you know, even PayPal now has recently said that you can have money, you can actually buy PayPal only in America, but I see it's expanding out a bit. So you can buy PayPal, and then when you spend money, you can draw on your cryptocurrency balances and things like that. So that aspect of payment will become more and more between transfers between parties. And insurance, like if somebody hacks into a exchange or something like that, these people have to be insured. So insurance is also a big part of DeFi. Now, all of this wouldn't have been possible without Ethereum. Now, when people look at the growth or the execution of blockchain and that, the first one was Bitcoin, the blockchain there. That was the first level. And then the next level, what happened, we moved forward, we've got Ethereum and the ability to deploy smart contracts and apps on it, which meant that it became just one big computer. And now we're moving to the DeFi aspect of it, whereby people are using that to go into business and do things like that. Now, Ethereum is a global open source platform for decentralized applications. You can think of it as a world computer that cannot be shut down. On Ethereum, software developers can write smart contracts and control digital values through a set of criteria that are accessible anywhere in the world. They have a currency on Ethereum, and that's called Ether. In order to be on Ethereum, you must have Ether. And it's a native currency of the blockchain, and it's used to pay the fees that allow smart contracts and dApps to run on the network. And they've got gas, and there's a lot of complaints about gas at the moment because because there's so much going on DeFi, then that it's there's congestion, and the highest person that pays the most to get a transaction through gets that transaction through, and that's called gas. So on Ethereum, all transaction and smart contract executions require small fee to be paid, and this is called gas. And that's why when you've got Cardano and Tron and these other blockchain things coming out, that they're saying that, oh, we're going to be instant settlement and things like that. But Ethereum is so embedded, it's difficult to see them being knocked out of their place. Now, these dApps, these decentralized apps, they're like normal apps, but the key difference is they run on a peer-to-peer network, like the blockchain. And that means no one person or entity has control over that. So here's just 3 of them. CryptoKitties, which some of you might have had something to do, but that's where you could buy and sell these kitties, and you could use an app to do it. MakerDAO, and then Uniswap, which we'll talk about a bit more later on, which is the #1 decentralized exchange worldwide for DeFis. So these dApps interface and interact with the blockchain through the smart contracts, as I mentioned before, and being built on top of Ethereum, they have these advantages like immutability. Nobody can change any information that these apps create once it's on the blockchain. It's tamper-proof. Smart contracts are published on the blockchain and cannot be tampered with, and it's transparent that smart contracts are openly auditable. And then the availability, well, they're active and usable 24 hours a day. So that's the good thing about that. Now, in order to handle all this, the coins and things you have to be housed somewhere, and you have an Ethereum wallet. Now, normally there's 2 types of wallets. There's custodial wallets and non-custodial wallets. And custodial wallets are wallets where third parties keep and maintain control over your cryptocurrencies on your behalf. Non-custodial wallets are wallets where you take full control and ownership of your cryptocurrencies. And so pretty much what's saying you're your own bank, because you control access to it. You have all your money there. You decide what goes in and out, and there's nobody can run away with it unless you give them your keys, you could say. But by using a non-custodial wallet, you trust no external party and only yourself to ensure that your cryptocurrencies are safe. And you will have heard all those stories about people that have lost their keys and things like that, and they've got millions of Bitcoin somewhere they can't access and things like that. So by using a non-custodial wallet, you pass the burden of security to yourself, and you have to be fully equipped to store your private keys safely. So if you lose your private keys, you lose all your cryptocurrencies as well. And that's why when you set up these wallets, they say, please write this down and put it in a safe place. Please double confirm you've done that and things like that. So they do their utmost, because there is nobody you can ring up and say, oh, I'm sorry, but I can't get into my wallet anymore. Now, in this DeFi space, the Ethereum wallet that most people use is called MetaMask. And MetaMask is really your window into your wallet, and it's a web browser extension. It's the best way to use it. It plugs into Chrome, Firefox, or Opera, or Brave browser. And as we've mentioned, it's a non-custodial wallet and acts as both a wallet and an interaction bridge to the Ethereum network. And when you're using it, if all of a sudden you go to a DeFi page and you have to pay something, as soon as you say you want to pay, a little window pops up there from MetaMask. It asks you to log in. It asks you if you really want to pay for this token or this coin or this smart contract or whatever. You say yes, and then it happens. Now, if you didn't have a MetaMask wallet like this, you would have to have a full Ethereum node inside your computer. That means you'd have to download over 400 gigabytes worth of the Ethereum blockchain onto your computer. So it's basically not practical. So that's why something like MetaMask exists. But you must keep precautions to keep it safe, because anybody has your seed phrase, which you give when you sign the wallet up, will have control over your wallet. And so in this area, there's two things to remember. A public key, if somebody's going to send you money, just like you've got a mailbox outside your house, you have to have some way for them to receive it. So that's your public key. You can give people that address and they can send you money to that wallet. The private key, though, is only to sign transactions and prove the ownership of the public key, and the private key should not be shared. So that's the one that if somebody got your computer, they'd probably do a text search on it for MetaMask or MM, and they try to find it if you've got your private key stored. Some people print them out, have them in a safe, whatever. Usually it's 12 words on a piece of paper is what your private key is, and you have to keep it locked away. Now, once you've got your coins in your wallet and you want to be able to buy some currency, just like you might go to a stock exchange if you buy shares, you go to Uniswap, which is a decentralized exchange. And it's a decentralized token exchange built on Ethereum, which allows direct swapping of tokens without the need of a centralized exchange. So like when using a centralized exchange, you will need to deposit tokens to an exchange, place an order book, then withdraw the swap ones. And so what happens with Uniswap, you just do the swap and then it ends up in your wallet and that's it. Now, what's interesting also about Uniswap, for some of you that have been thinking about, having your own tokens or whatever like that, Uniswap as a decentralized exchange does not have a team or gatekeepers to evaluate and decide on which tokens to list. There's basically smart contracts that check to see that what you're setting up is okay and complies. And so any ERC20 token can be listed on Uniswap by anyone and be traded as long as liquidity exists for the given pair between the two things, between Ether and your particular token. All the user needs to do is interact with the platform to register the new token, and a new market will be initialized for this token. And that's why you also have to be careful. You can't follow links in discussion groups saying, look, buy this token here. And it's sort of, you could say buy a Uniswap token, but somebody set up Uniswap 22 or something like that, and then they scam a whole lot of people to invest in Uniswap 22. You always have to go to somewhere like CoinGecko, make sure you get the right address for it, so that when you go and buy it, you are actually buying the right one. So there's a lot of caveat emptor there with buyer beware. So that's given you a good background now of, you could say, the DeFi and the token space and the custodial aspects of it. And I thought now we'd move on to financial systems and tokenizations. Is that going okay there, Scott? Are we good?
No, we got you loud and clear. Perfect, Paul. And people are saying they're really enjoying this. So there's a bunch of comments coming through here.
Oh, we're going to ramp it up a level now, so that's good. So tokenization is really a massive trend, and there's some people that believe it's going to be a bigger story than cryptocurrencies, coin offerings, and even blockchain. Now that's a big statement, but the thing is, there's so many things in our lives that can be fractionalized and shared and jointly purchased, which we do at the moment with houses and buildings and cars and all sorts of things. So it's an exciting area. And if we look at the evolution of the web, in the early days, when you just used to use your browser and there was Yahoo and things like that, it was basically a reading thing. You'd search and you'd find something you read. And then we moved to more of a platform economy where there was people like WordPress, YouTube, Facebook, where it was read and write. You could actually use it to communicate and share and respond and things like that. Now, when we've gone to the third stage of the token economy, there's actually the execution of that, of you actually setting up things that can be executed and run. And that's it's an exciting time like that. So tokenization is the process of issuing or converting an asset into a digital form. And these records, or the form of it, is stored and transferred over the blockchain. So you think, why are we having tokenization now? There's many reasons, but one of them is, well, of course, increased computer power. Mobile phones help, computers, the connections and the decentralization of it, all that's happened relatively recently. Smart contracts are able to automate transactions efficiently and save costs, so that's another reason. Digital currencies to fractionalize the transactions and pay the recipients are there as well. And then you need somewhere to store the funds, so you need some sort of crypto wallet. And then, of course, people say, well, how do I get it back into my bank account? Or how do I, if I get paid this particular coin, how do I get back so I can use that? So you've got to have digital exchanges to swap from crypto to crypto or crypto to fiat. And fiat is like dollars and things like that. And then, of course, the blockchain to indelibly record the entities, the transactions, and identities. So, those three things, recording entities, transactions, and identities, is important. So when you look at all this, there's a hell of a lot of things that's needed to come together to be ready for tokenization. And in the compliance area that I've had a lot of work in, there's different type of tokens, and like if you think of the SEC and ASIC in Australia and the regulators, the ones they're most interested in the security tokens, tokenized securities, which represent a range of financial securities like equity, debt, investment funds. And those are the ones when you see the SEC going after Ripple and XRP and saying it's not really a utility token, you're actually selling securities and things like that. This is the area where so many people say we're not offering our tokens in the United States because they don't want to get hammered by the SEC. But really, security tokens are a representation of value in an asset that has been fractionalized. But there's many assets that can be tokenized and sold in fractions. You can raise funds using art you own, and an artist can sell their art online. And recently there's been hundreds of thousands of dollars paid for art online, digital art, which is amazing. And people can own fractions of it, or they can own the whole thing. Collectibles and collectible items like hockey cards and baseball cards and things like that are now all moving online, and there's just a huge move towards them being in the digital space. Debt also can be tokenized, and then equity as well in terms of equity shares, investment funds, vintage cars, music, luxury items, and real estate and property. So there's many things that can be fractionalized. And what was interesting, David Bowie in his later days decided that he needed to get $55 million. So he thought, well, what'll I do? And he created something called the Bowie bond, which was sold at Wall Street. He got his $55 million, and they got the income stream from his, I think, from 20 albums and a few other things from music streams. And then when Ground Control to Major Tom went to, was in the film, the return yield lifted for the investors from 8 to 13%. Of course, he still owned all of it, but they got a share of the income stream. Well, today, those sort of things can be very easily tokenized. They don't have to go to Wall Street. He can just sell it to all his fans and other people that want to earn 8% on what he's got. The other type of clock that people talk about a lot is utility tokens. They're more like sort of like frequent flyer points, and they offer a right or a service. It's part of a community. Usually it's the oil that makes the community function. And a lot of people sold them during ICOs, and they turned out to be security tokens. But now, if you're going to raise money for utility tokens, you actually have to have a business that utilizes them before you can issue them. So the days of raising them a lot of money in utility tokens and then with that money doing something are gone, because you actually have to have the business and add the currency as being the utility aspect of it. And then I mentioned stable coins, that some of them are pegged to gold, some of them are pegged to other assets, baskets of assets. There's one called the Reserve Fund that's got several currencies it's linked to, and that. Now, one of the most exciting areas that's emerging, and at the end you'll see I refer to Elio, who's a guy that's probably the #1 for me guy on this whole DeFi space and crypto, and that he's issuing his own token, which is called Super Farm, and it's going to be exciting what he does. But he also talks about other ones, but it's what he's issuing is what's called a non-fungible token. And, you know, just like baseball cards, it's scarce. Non-fungible tokens are scarce, like it could be for a house, could be for a person's identity, but scarcity is an important part of non-fungibles. Developers can create as many copies of an asset as they wish. However, they can also limit the supply of these. So, you know, you've got maybe 100, just like you have prints. When people come and say, well, you can buy the original, but you can also buy a print, but there's only 100 prints. And the main painting's 100,000, but these are 1,000, but there's only 100 of them. So scarce is important. Of course, unique. They have to be unique. Certificates of authenticity, that sort of thing. And they have to be indivisible, because obviously if you're going to sell tokens for something, they have to be able to be divisible. So you're going to be hearing a lot. It's a strange word. I still exactly don't know what it means, but non-fungible tokens is what it is. And it can be used for like collectible cards, and celebrities can issue them. They can be used for virtual art galleries. And one area, if you've got kids that are involved in Fortnite or World of Warcraft or things like that, you'll know that, like, when it comes to Christmas and they say, well, what can we get you for Christmas? And they say, I want some V-Bucks, which is a virtual currency that's within some of these games. The problem they have at the moment is that they might pay $50 for a nice new sword or something like that, but they actually, it's all controlled by the game companies, and they can't actually, it's difficult to get real world dollars out of it. Well, in the future with non-fungible tokens, those rare in-game items will be able to go onto marketplaces like eBay and things like that, because they will have value as non-fungible tokens. Domain names as well are a virtual asset. And then, of course, in the real world of assets and property and real estate, and then, of course, for people's identity, you could have a non-fungible token that represents somebody's identity. So if we look at real world assets, it's still in early stages, but you can tokenize, and there's a number of examples of companies around the world are already tokenizing real estate, but not many of them are using non-fungible tokens. That's the next area where it's going into. A lot of them have been doing it through security tokens and things that they've been tying to like shares and stocks, but it's going to be, there's different ways you can do that now on the blockchain that'll show proof of uniqueness of ownership. So real estate tokenization is a method of fundraising that allows property owners to issue tokens as a form of shared ownership for their property. And these tokens represent a specific share of the real estate asset and can be bought by potential investors, essentially becoming partial owners of that asset. Now, that doesn't seem a lot different than shares, but the next part is where they're built on blockchain technology and they're extremely secure. It also facilitates easy trading options for investors looking to make a quick profit, and shareholders can sell or trade these tokens at any time. So that's the liquidity aspect, and the flexibility of it comes in that has been missing in a lot of these areas. Now, the tokens are created using the blockchain and smart contracts technology, and every transaction is recorded for each user comprehensively via a purpose-built platform that records the asset information indelibly, of course, on the blockchain. And this means it's more efficient and it's more secure, and it offers better compliance, more liquidity, and usually what are illiquid assets. It's transparent, efficient and scalable. There's reductions in premiums because of the liquidity of normally when you're going to pay where it normally costs more, and reduction of fees and charges for margins and spreads and things like that. So I thought now that we've been through that and we've chunked down to actually looking at how it can operate and how you can tokenize things and do things, let's have a look at some of the use cases in DeFi that are actually happening at the moment. People are actually investing money on there, and they can get like 8, 10, 12%, sometimes more, with no lockup periods, no need for intermediaries, and basically they buy tokens and then they collateralize them, and usually you don't need to go through credit checks or anything like that. You usually put 1.5 or 2 times the value of the loan as collateral, and the interest is generated back sometimes on a daily basis back to you, directly back into your wallet, and there's no middleman taking the cut there. Borrowing and lending is the same. There's borrowing and lending that people can they can do between parties, and that's also done on the blockchain. And there's organizations setting up that decentralized activities for doing that. So that's in its early days, but that is actually happening. Yield farming is an interesting one, because it means that you put money into a liquidity pool, and for providing that you get rewards. And that means if you've got say in a particular exchange, and in order for it to operate properly, it needs to have sort of pools of liquidity for each one of its tokens. You can put your tokens in there and be paid as it uses them for its liquidity pool. And so people can then take the money from that and they can farm it out into another pool and things like that. So this area is new. I haven't actually done it myself, but I know that people are talking about people that have done it and are regularly doing it. But this is new. These are new terms, as Scott said when he said that when they're staking, you stake your coins to be yield farm. You hear that and you're listening to the crypto banter guy and you're thinking, God, what's he talking about? Well, these are the type of words that you'll be learning about, and liquidity pools as well that are used for this particular purpose. So these are all new areas where your tokens are locked into the smart contract, and then you're rewarded with tokens for doing that. So sometimes in order for a company that's issued tokens, they don't want everybody selling them and marketing. They like to lock them up. So what you do is you lock up your tokens, and for doing that, you're rewarded with a percentage. And that means, obviously if everybody just like dumps their tokens on the market at the same time, and then there's so many available. So it's better that they're locked up and people are rewarded for locking up and holding them for a while. So that's a whole area as well. It facilitates trading and is used like by decentralized trading. So that's the that whole area was really just a brain dump in some ways. And as I said before, Lee's got the book How to Do DeFi and all that. You can look at that, and you can look at this again, and you can watch Elio and Crypto Banter, and we've got some ideas at the end that you can get. So now I'm going to go through the part of how you actually get going with this yourself. And you may not understand it all. I've tried to do it logically, where you start, as you can see here, with your local bank transferring to an exchange, which I use Binance, converting it to Ethereum. And then because the Ethereum network and MetaMask and Uniswap only use Ethereum, you have to convert it in Binance from your currency to Ethereum. You transfer it to that MetaMask wallet, so you're ready to buy, and then you buy your coins on Uniswap. So I've been doing this for a few weeks. I started out, this is my account in CoinGecko. So what I do is you add a new coin, you can put in there how many you've got. Like if you take that first one, Injective Protocol, I've got 250 of those coins, and it says there that those coins I've made $1,138, and now you worth $2,800. So you can see that, because it's decentralized, you've got to look after it yourself in some ways. Although you can, with Ethereum, you can go in and you can look at all your transactions. It's better to keep this yourself. But this is the result of what I've been doing. I've found that if you just are cautious and you listen to Elio and you buy the coins that he says, I found it's been very valuable and it's done very well for me. So what happens is we're going to move from your bank, transferring it to Binance, then to MetaMask, and then buying a coin. So that's the sequence we're going to follow. And you know, and in some ways you think, well, that maybe that's why there's not. When I started watching this Elio, it was about 12 or 14 weeks ago. There were only 3,000 people following his channel. Now there's 240,000. Which is crazy how this is growing. And I sort of think, well, it's not easy sometimes to do this. So you've just got to do it and learn it, and then you understand it. So what happens is, first of all, depending on what bank you've got, you can transfer, like with Binance in Australia, they give you a unique email address that you can instantly transfer through your bank, instant payment, to go to Binance. So that's what you've got to do. First of all, you find out how you, from your country, can send money to Binance. And so that's to load up your wallet in Binance, the exchange. And so in Australia, it comes back and says, yes, Paul is registered as a pay ID. I send the money to there, and then I confirm that the payment's done. And once I've got that receipt, then I can go and have a look and see if it's sitting in there, and they'll say, yes, you have got $60 in Binance that you have sent. So I know I've done the first step right. I've actually sent money to the exchange. And then I think, right, I'm going to do DeFi, so I've got to change that into Ethereum. So the money's there at Binance, and I can see I've got money there, $60. So what I want to do is trade it. And this is what I do. I click on that button, trade, with the big blue arrow, and I want to trade it, and I want to buy Ethereum. And as a little bit of it, Binance is a bit more complicated. It's easier actually with Uniswap, but you can't do this aspect of it. But you see, I want to buy Ethereum with the $60 I've got. The real trick on Binance is you've got to slide that damn lever across there to say you're going to transfer the whole lot to buy Ethereum. But you know, this is something you get used to, and Binance have got excellent videos. And basically what you're trying to do is say, I want to convert that $60 into Ethereum. So look at that price back then, 556 Australian. So that would have been $400 US for Ethereum. And now it's $1,500. But anyway, so then you push the buy Ethereum. So you slide the lever across and you've bought your Ethereum, and then it ends up in your wallet. You can see now I've got 1/10 of an Ether. So that has happened. So now I've actually transferred it from my bank account into Binance. I've traded the Australian dollars, and I've got Ether. So I'm sitting there already now with Ether to take the next step. The next step is to export it out of Binance, and you're going to put it into this MetaMask wallet you've got on the DeFi platform if you're going to buy DeFi coins. So all you do is, this is the coin I want to send, it's Ether. And I check, I'm going to do it in ERC20 one down there. I check that's the maximum amount I'm sending. I'm going to send 1/10 of an Ether, and I'm going to send it across. And that address up the top, that recipient's address, is my MetaMask address. So I'm saying I'm sending it from Ethereum to my MetaMask address, which is my DeFi Ethereum wallet. It's always, they have all these things. In fact, there's 3 things you've got to do with Binance. They send you a code by email, they send you a code by phone, and you also have to do a Google Authenticator code. And then you push submit. You've requested to withdraw to this address, and I always remember the first 4 digits, because I've got the same address for all my coins, OX75 and then F35 at the end, and I know, yep, that's right. And you put the code in there and you send it across, and then they tell you that your request has submitted, and you're ready to go there. It ends up in MetaMask, and you can see here now that that $60 has been received. MetaMask tells me, yes, there's amount of 10.10 Ether has arrived. That $60 is worth $41.63 in Australia. So now I've funded my MetaMask wallet. And the next thing is to go and buy some coins. So Uniswap is the exchange for DeFi. You can see out in the top right, their launch app. What it's saying is, okay, launch the exchange. So I click on that button, launch app, and up comes this little window. And this is amazing compared to all that complications of Binance. You can see I've got a balance there of 0.11 Ether, and I'm going to use that to buy. Up in the top, you can see that address there, the top right there, OX75, and it ends at the other end with that 35. So now we have to select a token. So you click on select a token, and I've selected a token called Ocean. And I think, well, I want to buy that token. And so I'll say, right, I want to use my whole balance up, and it says I can buy 102 of those. And then you push swap, and it basically goes out onto the Ethereum network, and it can take a while. It can take, sometimes it's instant, sometimes it can take 10 minutes. But anyway, that's the problem with congestion on the network. But then what it does, it comes up, and after you've pushed swap, MetaMask will say, do you really want to spend some money? Do you really want to use it on Uniswap? And you say confirm, and then it transfers the thing through. So that's the process of going from the bank to getting it to Binance, transferring it to your Ether wallet called MetaMask, and then buying a DeFi coin on Uniswap. That fella Elio has also got an excellent video on doing this, which lasts for about an hour, and he does it through the whole thing. And so in terms of learning more about this, the way I would approach it is I'd first of all look at the videos from Elio Trades on YouTube. Crypto Banter is a South African guy that is also excellent. His are an hour each, which means, and he does them at 10 o'clock New York time every day in the morning, and I find them long, and so Elio has like 12, sometimes he does an hour, but mostly 14 or 15 minutes, so I like Elio better there. Or you can search for DeFi, MetaMask, or Uniswap on YouTube, and then Binance videos are really good, and then of course I've sent to Lee CoinGecko How to DeFi book, which you can make available to you. So that's the presentation, and it's basically, I've taken you through the whole world of DeFi, how it operates, how it's going to impact on fractionalisation and tokenisation, and all of those tokenisation, real estate and things like that will all able to be swapped on Uniswap. In order to do that, you're going to have to get money into Uniswap to buy them. And that was that, Scott. How's that? Nearly on the hour. What about that?
Awesome, Paul. Wow, that was really, really interesting. I think, you know, especially I really enjoyed the practical session at the end there in terms of how to do it. You know, I tend to joke with people, but even though I've got a master's degree in technology, sometimes I see these things and it makes me feel stupid. So, as to how hard it actually all is, you know. So anyway, but no, look, I think Paul, just a couple of things that I just wanted to say. One was, firstly, I just want to show something here. If I just steal the screen quickly. In that article that I've shared people, it says here, retail investors used to always be wrong, said veteran Wall Street institutional trader. Not anymore. Now you've got 50 million of them all tied together and they really matter. And it talks about how, pretty much what you're saying, how they're standing up and how they basically had enough. There's been a lot of pent up aggregation at their financial services that's been brewing for the last 13 years. So I do really recommend that people read that article if they're wanting to understand. You've given us a very good understanding of the DeFi and the technical. And, you know, there was a great graph that I remember seeing years ago that you did where you kind of had the technological disruption, but you also had the societal disruption and how it was merging together. And really, it's both. You know, it's kind of 1 + 1 that's equaling 3, which is causing it to explode. Paul, you mentioned something before the webinar, and I see there's some questions there as well, so we'll answer them. But there was you mentioned something about the regulator. So one of the greatest challenges that we've even had, and you know, with the WealthE coin and whatever, has been around regulation and securitization of tokens and all this. And one thing you said before we joined was that, you know, the challenge that the regulators have is that they're not going to be able to keep up with the speed of which things are happening. And also because these tokens, there's so much, not autonomy, what's the right word? Where you, like they don't actually know who the people are. Yep. It's so difficult for the regulators to kind of stop this. What are your thoughts around kind of the regulatory space and how this is going to play out in the space?
Yeah, well, from what I've seen, that it's in many ways it's self-policing, and they have these things called rug pulls and people that just set things up. So what's happening more and more is that the legitimate one, like back in the days of the ICOs, if you go back a few years, where people just basically pumped up anything and had a go. Here, there's a degree of legitimacy of it. Of course, there are things that people put up there that maybe are rubbish, but what you're getting is it's self-policing. First of all, all the code has to be audited. It has to be it has to be a product. And I suppose while it's in the domain of predominantly nerds and people like that, they understand if the use case is going to be valuable to the Ethereum network, and it's actually truly going to have a good purpose. And nobody knows which is going to become what they call the oracle in, say, the lending space or whatever like that. But there are several players for that. So of course, people will back those, and the coins now that are beginning to take off and grow are the ones that they're hoping that in the future will become those ones. In terms of the regulatory aspect, I think that these things become self-play, which is a bit very much like your idea, what you passionately fought for, where why can't the crowd do due diligence on the properties? That's effectively what's happening, because when somebody puts a token up there, there are millions of people hunting around searching. Like, it was interesting to find now somebody's discovered that they all do searching. Why is Bitcoin, just as it goes up, gets dropped down, and just as it goes up, gets dropped down? Who is selling? And they found out that, I think it was FS2 or something like that, one of the largest miners in the world based in China, has been selling between 300 and 400 up to $1.3 billion worth of Bitcoin each time the market got up to a certain level. And people can find that out, they can publish it, they share it, and then people say, if you're a miner for FS2, delete, don't do it anymore, these are bad actors. And so that sort of thing is happening more and more. And I think that outing people and communicating, the news travels instantly, and all of a sudden, as you saw with GameStop, with Dogecoin, all those sort of things, that the instantaneous nature of it, you can't have a regulator inquiry that's going to last for several months, because it's never going to work these days. These things have to happen within hours.
Yeah, no, it's fascinating. I think Gavin asked a question around the WealthE coin, and I know Rowan, who's our partner in India, asked, he didn't actually know how much work we'd done on the WealthE coin, which we launched back in 2018. I've actually been talking to David Orban as well, and I know, Paul, you and I were talking about it just before the webinar started as well. So I think to answer your question, Gavin, I had dinner with Willem van der Post 2 nights ago, and I think one of the things that people like Paul and myself get into trouble with is that sometimes we're a little bit ahead of the curve, and we kind of have to wait for adoption, with the likes of the WealthE coin and stuff. I think that, the world is changing fast now, and that these things are becoming much more relevant. So it is a space that we'll watch. And as we've always said with the WealthE coin, the intention was always to have it as a critical part of the overall ecosystem. We have been waiting for David Orban specifically to give us a heads up around security exchanges. And I know Paul has said he's got some ideas around it as well. So it's definitely something that, our intention was always to wait until the timing was right. And it clearly seems like there's some headwinds now, behind this. So, it's...
Well, definitely. I think that, it's so much easier now. And everything that you thought about it and wanted to be, a lot of it still can be. It's just now that you have to focus on that.
Got some COVID there, Paul.
Yeah.
The last thing I just wanted to say, you mentioned this gentleman, Elio.
Yes.
How do I pronounce that, or how do I find it? Is there a link that we can put in the...
You just have to go to YouTube and put Elio Trade in, and he's one of the largest. I've got a very large group. And it's the same with, I think it's Crypto Banter is the same, but he's usually one video a day, and it's just been magic. Like, basically, well, I've decided I will only invest in coins that he's researched, and it's basically, I started off with $800, and then what I did, and I put money in there. I think it was a tax refund. And then I think when they're closing that Seychelles exchange, or we're going to start charging, I took my money out of that and I put that in there, and for the rents and things I'd received from properties I'd invested with WealthE, Migrate, and a number of little bits of money I joined together that became 800, and then in the end it was about $3,000 that I've put in there. And now that's Australian, and now it's 12.5 US, which is about 16. So from his tips in there, although he says I'm not giving financial advice, but the thing is, he gives you indicators of what has got a good use case, will fit well into the future in DeFi, and it's worth putting some money into it. And you know, of course, you put money that you know, it doesn't matter whether you lose. That's how I've looked at it. So, but you know, it's I feel it's done really well. And it's fascinating. Keeps your brain active as well.
Yeah, no, it's amazing. Paul, there were a number of comments, very complimentary comments. I don't know if you saw it in the comment box, thanking you very much for your teaching and how good you were, and just numerous comments about how much value you added. So just wanted to acknowledge that for you. And someone also asked, is there a way to learn more? And I know that you're actually putting together some courses for people if they are interested. So I think we'll kind of hold the space, but you know, between you and Lee, once that's ready, you know, we can let people know if they're interested. But I know that it's certainly a passion of yours to share the knowledge with others.
Yeah. Well, one of the interesting things is that, well, two things. First of all, with blockchain, is that there's a blockchain course you can do online that virtually guarantees that you get residence in Australia, because there's such a shortage of blockchain people that there is a course, and it's a guy that I work with designed the course. We don't run it anymore. It's been universities and other people are running it, but it means, because there's such a shortage in that skill base, is that if you do and qualify in that course, then you can do that. And the other one is, if you've got any kids that are interested, you know, that are that way inclined to do computer programming or something like this, the programming language for Ethereum is, I think it's called Solidity, and there's such a worldwide shortage of programmers in that you know they're earning in Australia $200,000 to $300,000 for you know, just as programmers. So that's two areas that people can, you know, impact their lives really well. But yeah, I'll get back to you when we've got those courses ready, Scott.
Awesome. No, thanks, Paul. And to Christine, you said you're really interested to become an ambassador for Wild Migrate, as well as an investor and educator. So that's actually why I just put up the screen here. You've got all the different links, including Lee, that's our head of community. So just reach out, and you know, we will happily help. I mean, I think from your perspective, Paul, you know, it's 10 o'clock at night there, is it not? 10 past 10.
Yes. But if anybody got any questions, you just can send it at paul@wealthmigrate.com, and I'll answer them. And if I can be any help, you're very welcome. So
excellent. Well, I just want to say, and then I'll hand back to Lee, I just want to say a huge thank you to Paul. You know, a lot of preparation that you put together there, a lot of knowledge. I don't think people fully understand and acknowledge that in 1 hour they've got access to, you know, probably more than 10 years worth of information all in one place. So I really want to appreciate it and just say thank you very much from our community for sharing. We really appreciate it.
No worries at all. Thanks very much, guys. I'll head off to bed. Leave you to it.
Thanks very much, Paul, and to our community. Thank you for joining us for our first WealthE Wednesday of the year. And wow, what a WealthE Wednesday it was. It definitely packs a punch. I don't know about you, but my brain is reeling with all the facts that Paul has shared. So thank you very much, Paul, and to Scott for being online with us for this afternoon, and to our members who joined us for an afternoon session instead of an evening. Our next WealthE Wednesday session will be on the 3rd of March. So we look forward to welcoming you then and sending out details in the next coming weeks. To those who have asked for for details around the course that Paul was mentioning, for Australian citizenship, I will get further details from Paul and see whether I can find out more information and send that through to you. And for the rest, wherever you are, I hope that you are surrounded by love and the people that you cherish most. Be safe, and we look forward to seeing you online soon. Take care. Goodbye, everybody.
Everyone.